I'm gonna go ahead and stream this on the YouTube channel too, so that way you guys can get the link. And
Or what's your YouTube page? Your info for your YouTube page.
it is Cory Forex. Cory Forex. The same everywhere. This is me right here. Oh no, it's not. I thought it was.
I was about to say, yeah, that's the one I was on, and I'm like, okay, I don't see any up to date ones. Okay.
That's funny. All right, I'm gonna change this. That's funny. So I got some videos I posted. I'm gonna start posting more stuff that's public, but most of the stuff I post is not public. I just post it for you guys and we just drop the link. So this is the one you want to follow right here. So this is it right here. It's some videos showing, like I said, a good video. If you guys are just starting, this a good one. And then I can show you some other stuff that I have that I can drop to you guys too. Um, this is my whole little library on here. So there's some other stuff in here. If you get a chance and you can see anything you might want to go over, I can drop that in there to you guys too. But
Yeah, so
that's
we have to be subscribed to your channel, right?
yeah, but these I don't make public. These I don't make public.
Okay, I'm
I
already
don't,
subscribed. I thought that was the wrong channel. Okay.
nah. I just need to start posting on there more. Yeah. Okay. GU, EU, USD, JPY, UCAD. Did I see anything on here twice? No. Gold, UJ, volume video. Ooh, yeah, that's a good video. I think I'll show it. I could go over that actually today, so I'm gonna drop that on here. Gold volume and how you use that. I'll do GJ. I'll do GJ since Shanika asked that question. Shakira asked that question. Okay, so GJ, GBP, JPY. Okay, so if I'm looking, I look for different things when I trade. So some of the stuff you might not hear people talk about, you know, and some of the stuff you may have heard, but that is, what I would look for. Um, but either way, I'm looking for major areas of resistance. If I'm on a higher time frame, like we know it's sold off from here, sold off from here, right? So I know this area right here is an area that I would want to pay attention to. This area right here, another area I want to pay attention to, right? It bought from here, here at this low, here at this low, right? This all from the daily, right? So these highs, these lows are major areas on the daily, right? So now that I know I'm looking at this from a daily perspective. I could do the same thing from a weekly. Let's look at the weekly. Weekly, bring you down here. Little weekly rejection area right here, and then above here. I'm not marking up the chart per se. I just want to show you like certain areas that I would want to look for myself, right? And Reason being is because these were major areas of rejection or liquidity pools that are sitting at these areas. And what I like to do is I like to look for areas where I know there's liquidity, because I know that if I'm looking for a trade setup, I'm looking for the area where I'm going to see them go after the money, right? So area like this and like this is money resting below these two areas right here. It's money resting above this area right here. So if you notice that every time you get an impulse up or down like these, if I was gonna go up, there's usually an impulse to the downside first, right? Just like this. Once price got to this low and it pushed up, before it made its next move, we get the drop, right? So it's coming to certain areas in order to make this move up, right? And this is going to go into what order blocks are, right? So for me, when I'm looking for areas that I want to trade from, I'm looking for where are the order blocks on the higher time frame. There's one right there. There's one right there. There's another one right here. There's one right here. It's several within this move up, but I don't want to go into those. There's one right there. And if I'm looking at the downside, it's one right here, right? And when I mark up my charts, I'm simply looking for price to get to a higher time frame order block or an area of liquidity, and then I'm looking for my setups. So if you zoning this off, right, I can zone this off and show you where all the zones are, but the primary areas that I'm looking to take my trades for are higher time frames order blocks. And I do that because this is going to kind of answer like three questions at one time, right? Felicia asked what are order blocks. Um, Ryan asked how do I mark up charts, this is how I personally do it. And then Paula asked what's the best strategies to prevent from stop hunting, right? This is actually going to answer all of those questions in one explanation, because when I'm looking for my entries, I'm trading near where your stop loss should be. You got me? Right? So if you take a look at the GU setup that I'm waiting on right now, right? Which I could have called already, but I just didn't. But if you see this is an order block right here, but there's an even larger one on the higher time frame, right? This order block right here, last candle before the down move, right? This is the biggest candle for the down move, right? Or you can look at these two candles right here before the down move right here. And they traded from this order block down to this order block right here, right? Traded all the way down from this order block on the top side, right? Which there's another one. It actually traded off of this wick, touch this order block right here, almost to the T right here. See where this high or this wick is? The lower this candle is the bottom of the order block right here. The higher this candle, wick this area and basically sold off.
So you will consider order block to both candles, this larger one and these two candles,
Which one?
this one,
Right
this
here
one, yeah,
and this one.
and this one. So two
Yep.
order block.
Yep. You will notice they cascade them sometimes.
Okay.
They put smaller order block. They put a big order block inside smaller. And put smaller order blocks inside of big
And
order blocks, right?
okay.
They put another one in right here. This is the order block that they use to push the price up right here.
Mm-hmm.
So at some point you may see price push back down to this area, right? And let me lock this because I don't want to move this. Also, another thing you'll notice about order blocks are they're usually at key fib levels too. When you this particular order block that was entered in right here is the 618 from this low to this high. And if I put my fibs on, put my fibs on, you'll see, boom, right here, order block, trade entry right here, price moves up, right? And you trying to get to this level right here. Comes back again. Where is it trades back down to? 618. Another order block, push it back up to the upside, right? So you want to kind of look for what I do is I look for those things to find where my trades are. So I go onto the higher time frame. On the higher time frames, and in this case, what I'm looking for is a daily order block, which this series of down candles right here is one, and then we have one right here, right? We've already had a single trade off of it right here from the order block pushing. If we measure this right here, this last up move from here, wait, I don't need this. From this low to this high, order blocks right here, trade returns to the order block right here, trades about 50% of the way into this order block down to the 70%. And now we got another trade, right? And your goal when you get a trade from here is to make it back to the zero. And in this case, it did exactly that, right? Then we got another trade. This is probably an order block right here on a lower time frame, still inside of this one right here from this low to this high that you could have got this entry from and this entry from right here. These areas where I'm looking for these trades are the same areas that banks are entering their trades. And basically to define an order block is these are large blocks of orders that banks use to enter their trades. If you look at a buy and you look at a sell, right? This is the this is the entry for a buy. This is the entry for a sell. This is your target for the buy, stop loss for the buy. This is the entry for your sell, stop loss for the sell, target for the sell, right? And if let's define exactly what's going on, right? Buy entry. Buy
I
entry
got
here.
you.
Sell entry, right? Oops. So anytime you put in a buy, anytime you put in a buy, you're also placing two sell orders simultaneously. Every time you put in a buy, you're actually only you're putting in one buy order and two sell orders. When you put in a sell trade, you're putting in one sell order and two buy orders. Sorry, I got a little cough. This is actually what you're doing when you enter a trade, right? Every time you enter a buy, you're putting in a single buy order and you're wrapping it in between two different sell orders. You put in a sell order, you're putting in one sell order and you're wrapping it in between two buy orders, right? Sorry, hold on 1 second. Okay, pardon me. All right. Okay, so knowing this concept right here, easy concept, right? When I am, if I know I'm a bank, right, and I know that I want to buy this, and I know that if I want to get a good price, I need to push down into the market. I need to push the market down to get sell orders from here or here so that I can buy these back right here, right? Anytime I do that, right? So if I look at this and I see this area right here, or right here, or above here, or above here, if I was to buy this and I wanted to get out of this trade, I would have to find somebody willing to sell my orders to, right? Right up here. That's what these trades are. Or if I got stopped out, if I got into this buy and got stopped out down here, I would be selling my orders to somebody willing to buy it, right? Just like if I hit my target, I would be selling my order back to somebody to exit the trade for the buy. If I was selling from right here, using this as an example, right? If I was selling from here, somebody would have to buy my trade back for me in order for me to get out of the trade for a loss. If I sold this and I got stopped out, but if I sold it and I went into profit, right? Somebody would have to buy my trade back down here, right? Or I would have to find someone to pair that order with, right? So when they do that, right, they use order blocks to get all of these trades that they know that they have waiting down here, because they know when they come to this particular area, a lot of people will be exiting out of their trades right here, exiting out of their trades right here, because it's done it before already. On the buy side, a lot of people exited their trades up here and up here because they know that those areas are key areas of liquidity, which is basically money that's just waiting for them to pick up. So they use the order blocks to put in to push the market up from here so they could come back down and get the rest of their fields right here. They use another order block to push the market up to come back down, get the rest of their orders in right here because they want to see this market either go up or push it up higher so they can sell off up here. I hope that kind of explains. I could go into details about that, but it's a lot more. It's probably not a one class that you're gonna get it all out in, but just like to basically like simplify it to the best of my abilities. That's probably the best way to explain it. They're just large blocks of orders where banks use them to enter their trades from. That's the easiest way to understand it. And the way you recognize it is they're going to be a series, a single candle, or a series of candles right before an up move for a bullish order block, a single candle or a series of candles right before a down move if you're looking for a bearish order block. You'll see this order block entered and you won't immediately, sometimes you'll have the opportunity to immediately use it, but it's something that you'll have a setup from after the fact. So we actually use this order block right here, came back, pushed up, came back down, wicked off of this for the buy and pushed the market up. Order block entered here, price pushed up, it came back down, rejected at this same area and pushed the market up from there. This is an exception to the initial rules of an order block, whereas in this case, this is an order block entered in the middle of an impulse. Sometimes you'll see that, but the reason for these types of order block is because it's a continuation order block. They've reached a particular area of liquidity, and in order for them to continue to market up, they need to put an order block in to entice new buyers, new sellers, in order to buy their orders to keep going up. So if you look at this order block right here, and then I scroll over to the left, see this high right here? This is the area of liquidity. In order to push above this liquidity pool right here, this area of pending money right here, they needed to put an order block in to get above that, right? They had to do that because if not, everybody would be simply looking to sell off right here because what happened several times, we had a high, a drop, a high, a drop, high, a drop, high, drop. The expectation coming back over here again is a high and drop, but order block was entered and now we got to push through those highs until we got to this area of liquidity right here, right? So I hope everybody understand it. I hope I explained it well. If that made sense, can you drop some sevens? If that made sense. So only one person, 3 people, 4, 7. Okay. So out of everybody who didn't understand, like everybody who's still like deer in the headlight right now.
Hey, Cory,
What's up, Aaron?
can we get two order block together?
Can there be 2 order blocks together?
Yeah.
Yes, they can. There can be 2. Like they will cascade the order blocks.
Actually,
Um,
on
I,
in UJ on daily, I see two order block.
NJ,
And no, UJ.
UJ,
Mm-hmm.
USD, JPY. on the daily, or what are you looking at?
Yeah, exactly this one. This, will you say this is
Right
2 on?
here.
No, no, this is left one. Left one on green line. Yeah, this one.
Right here.
These two candle and these series together.
This one is an order block.
And this one,
This one is an order block.
okay, together, right? And almost
Mhm.
size.
Yeah, yeah, yeah.
Okay.
There, um, this is the bearish order block right
Yeah, this
here.
is bearish.
And then if we, so you want to get the ones off the higher time frame first. The ones that I use the most are the daily, the 4 hour.
Okay.
So now that I know, hey, there's um where I am right now with price, we're at a high, a lower high right now. Here, if I'm looking at this, here's the order block right here. So if I know that I'm trading inside of an order block right now, I know there's a high probability that I've reached a point where the market should turn, right?
Right.
And if I don't, if it doesn't turn, I know that, hey, I know that I'm in an area where if I do get stopped out, I shouldn't have to use a large stop loss. Those are the most important parts about it, right? Because you want to make sure that if I'm going to trade in this area, hold on 1 second. I don't think I dropped this in here. You want to make sure that this answers the question that Paula asked, right? I'm going to show you a couple of examples, right? So if I'm using this as my trade setup, right, and I'm looking to take a sell, right? Let's say I finally, I see my setup right here, right? I know that at worst case, this is going to be my stop loss because it's the next high up, right? I finally get my entry signal right here, right? So if I enter this trade, this is going to be my initial setup, right? And what I'm looking for is I'm going to trade to either another order block or another area of liquidity, like this area right here, right? If I look for this trade, which is the break, right? This is going to make my stop loss a lot larger, right?
Yes.
Because in this case, my stop loss would need to be 58 pips versus one that's 30 pips, or in this case, 30 pips, which in reality, you actually didn't even go into drawdown 5 pips, right? If you took it from here, you would have instantly went in profit, but you had the potential to go into drawdown 30 pips at least. So that's the main reason why I trade like this, because if you look at like this setup on GU that I'm waiting on, right? If you look at this setup that I'm waiting on GU, I know I'm trading near an order block right around here. At worst case, if I go into drawdown, I'm looking at about 30 pips, right? But I know I'm in an area where it's traded off before and it has the potential to reject, right? So if I get this trade the way that I'm looking for it right now, and even if I had to took this entry, right? This entry from where it dropped from was already 30 something pips right here, right? Actually, it was more than that. Yep, about 30 pips. About 30, about roughly 30 pips, right? So even if the move is not particularly ready, I can get the advantage of I'm at the highest point that it should be expected to trade. And if it does not, I know that I can at least use the high as my stop loss or the high of the order block as my stop loss. And I don't have to use a large stop loss to take this trade from. Just like over here, I would have been trading off of this order block to get this trade right here, knowing that my entry would have been around this area, my stop loss would have been around this high. But if you look at this trade, if we had took this setup for this sell-off, we basically had no drawdown on that trade for something that went from this order block to this order block. Took out the liquidity right here at these lows right here just to get to this. Yeah.
Got it.
So
Mhm.
that's the primary reason why when I'm marking up my charts, that's what I'm looking for. If you guys are trading breaking retests, let me clear this off. If you guys are trading breaking retests, you can still do breaking retests, right? What you can do in a lot of cases is you can take this high that's been made, just like over here. I got a high. Here's a little trick I'm just gonna tell you, right? Once you see a high that's been made, right here, drop to the lower time frame, there's a low, right? You start with the higher time frame, you go to the lower time frame. You basically, let me start over and show you what I just did. First of all, use this higher high, higher high, lower low, live. The indicator is right here. Higher high, lower low, dot dash live, and it's by this guy Lonesome the Blue, and it's got about 1,318 likes. That's going to be the indicator you use. When you go to the settings, make sure you have on show support / resistance, right? And you can leave everything else default. You're going to use this because this is going to help you find key areas, right? So starting on the higher time frame, right? We got a lower high right here, right? We don't have a higher low yet, right? So we just gonna mark this off. We got this high right here. We're gonna go to the 4-hour. On the 4-hour, we still using that daily high, but we don't have a higher low yet right here, right? So we can skip down to the next time frame, right? So over here on this time frame, we do have a higher low, right? Boom. This your zone right here. This your entire zone. If you want to break this down to smaller chunks, right? You want to get a more precise entry. All right, you know this is your first low, that's your high. We're gonna go to the 30-minute, right? Do I have a high on the 30-minute? No, nothing yet. Okay, so now we don't have a high on the 30-minute. I do have it on the 15-minute, right? Boom, cool, 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 right? So now I'm gonna trade out of that area. I'm gonna look for my trade on the 15-minute out of this high and this low. Whichever one break, I'm gonna trade that area, right? So this would be my buy break. This would be my sell break. You don't have to make it any more complicated than that, right? Then when you're looking for your targets, where is my most recent area of rejection? Down here. Boom. That's target one. Where's the next area of rejection? Got some right here. Boom. That's target two. Where's the next area of rejection? Boom. That's target three. At least 3 targets should get you what you need, right? Measure this out. All together, this trade is 46 pips on the sell, right? Same thing for the buy. The buy, where is my rejection? Targeted right here. That's the first time I get some rejection. The next area, boom, right there, right? Rejection. After that, can drop it somewhere in between here. Boom. That's 3 targets. I can probably add one more right around like just anywhere in between here. Rejection, all this area right there. I'll just go to look for 3 targets. That's 31 pips. I'm done marking this up. I'm done marking this up. If it goes any further, you know, that's cool, right? That's cool. I can do something, you know, make it a little more tighter if I wanted to. If you wanted to, you maybe could take an early sale from here, you know, that's a low right here, right? You could also do that, but look at what you're only trying to make though. You from there, you're only making 13 pips, right? Just to take a trade, that's kind of dangerous, right? Because what do we got right here? Order block. What else do we got right here? Order block. So that means that if I take this trade, the probability just got higher because I literally got order blocks at the exact same spot. Even though they're on the 15-minute order blocks can do a lot of damage, right? So if I do get in this trade, this tells me that if I get in here, I only got basically 5 pips before I'm in an area where this trade could turn around on me, right? And if I'm lucky enough, I can get down to this area, but that's only 13 pips. And if I'm trading break and retest, then I need to wait for it to actually break structure, which is down here, right? So we're going to get rid of that. We're going to get rid of that, right? And we're only going to look for a trade out of this area or that area. That's your markup, right? That's how you don't have to make this no harder than that at all. It could be that easy, right? Right? And just to show you again, like how quick and easy that is, right? Let's look at GJ. and we haven't touched GJ, right? We're gonna do the same thing. Let's clear it. Daily, right? Daily, what do we got? Lower high. Bam, right? Do we have a higher low or a low on the daily? No. So we're gonna go to the 4 hour. We got one here, right? On the 4 hour, right? Boom, that's cool. But from this higher low, do we have another high outside of this one? No. So let's drop down to the 1 hour. Do we have another high? We do. Right here. Boom. There's my other level, right? Boom. I got a high. Now, where is my low? I don't have one on this time frame, right? Cool. So let's go to the 30-minute. Boom. There is one right there. Boom. What we got? What is where price is done? That's your whole zone right there. That's your zone right there. Easy. Easy. That easy. Like, didn't have to do any guessing. I didn't have to figure out nothing. Everything that's pivotal in the price action right now is found just like that. You just got the shortcut to doing this. What's this range though? Let's check out this range. 30 pip, cool, right? Because guess what? At this low, guess what I can do? 30-minute, let's go to the 15-minute. Do I got a high? I got a high, right? So now I can define this even further. This is a good size range. I'll go with that. But now you see, guess what? If I trade out of this area, which is going to be my buy break, this is going to be my sell break. This is going to be my target. First target. I already got that. That easy. For the sell. First target. I already got it right there. Where did it come from? Higher high, a lower high, right? Rejections, right? Next target on the buy, right? If it continues above this, I could trade to this area right here. This rejection, this is another rejection area, right? Target. Keep going up. What do we got right here? Rejection, target, boom. That's enough. I don't need to go any higher, right? Because if I keep going, I'm coming to the daily rejection area, right? Down here, where's the next target after this area, right? Look down here, boom, rejection right here. Where is this? Rejection, boom, target right here. I can clean this up a little bit between these two. So I could probably slide this up a little bit, slide that up a little bit, even slide this up a little bit just to be on the safe side so I'm not reaching, right? Rejection, rejection, rejection right here. That's enough targets on this, right? Boom, I'm good, right? If it trade out of this, guess where I'm trying to go to? This is the higher time frame rejection, right? So if I look out on the higher time frame, boom, guess what? I got the daily zone right here, daily low, daily high, right there, just that easy. I don't have to go no further. But just like I showed you before, where we are on this chart, right? Isn't this a high? Isn't these highs, aren't these highs on a higher time frame being rejected, right? So if I take this buy from here, right, I'm gonna be a little more hesitant with this because if I take this buy, I'm only able to get 11 pips out of this before I get to target one, right? So really your major buy needs to come at this area. So this would be also another buy area, right? Because this area would clear the highs from the higher time frame, right? So that would make sense for a bigger buy. This one, if you take it, you have to be careful because you're now trading near order blocks. You're trading inside of order blocks in this area. And this could at any point get rejected and reverse on you, right? That's what stop hunting is right there. You know, that's where that stop hunting comes into play.
Okay. Got it.
Okay.
Okay.
All right. Cool. So that answered like 50 questions all in one, right? um, let me see. That answered this question. Oops. That answered this question. Answered that question. And it answered this question. Understand markups better. Hey, Corey, I would like to understand markups better. Can you explain target areas? Answered that one. This also answered this one. Felicia, okay. The question you answered, that one was about when to exit a trade. I hold drawdown too long. Um, do you do you put stop losses in? Do you use hard stop losses or are you always using visual stop losses? Oh no, she's still on. Felicia, you still on? Okay, I don't know, but basically, let me show you what you do. Let me show you what you need to do, right? Every time I take a trade, this is what I do. So I'm looking for this sell, right? I go into this tool right here. If I'm looking for a sell, I'm going to use the short position. If I'm looking for a buy, I'm going to use the long position, right? I put my entry wherever I'm going to enter, my stop loss, where I'm looking to take the sell from, the stop loss, and then I'm looking for the target, right? And then what I do is I click on it. Once I got everything in place, and I grab this number, I grab the entry, the stop loss. Oh, hold on, guys. Sorry guys, that was Kim calling me. Anyway, so again, I go ahead and get my trade set up with the stop loss, targets, and then I get the entry, the target, and the stop loss price, right? And after that, I go to this website, right? I put everything that I'm looking for on this particular trade, right? So let's say I'm using a $2,000 account, right? The leverage on my account is 500. I'm only gonna risk 2.5%, right? Which is $50, right? Um, I'm gonna be trading, let's say SPX, right? No, let's use that example. So I don't want to confuse nobody. So my trade is on GU, right? I'm got 2,500 leverage, 2.5%. I'm looking for Forex, looking for GU. My entry price is here. I'm gonna be going short. My target is here. So this is my take profit overall. My stop loss is here, right? I'll be risking 31 pips to gain 161, right? Then I'm going to scroll down, calculate position size. This is going to tell me a bunch of stuff that I need, right? First, it's going to tell me the lot size I should use for this trade. Then it's going to tell me my risk reward ratio, which is 5.13 to 1, right? It's going to tell me leverage used, margin used. It's going to tell me I'm this incredible risk to reward. Give me some praise right here. Then it's going to tell me how much I would potentially be willing to lose for what I would be potentially gaining, right? This is going to be your basis for how you enter your trade, right? When you set up your trades, right? So you already know, right? I am only potentially losing $50, right? So if you know going into this, right, that anytime I enter a trade, there should be no trade that I enter in that is going to make me lose over $50, right? Right? So if I go in and I'm looking at a trade, right? If I'm looking at a trade that, you know, I'm looking to get in, but I'm concerned with losing the trade, I know that if I lose this trade at most, I'm going to lose $50, right? And I'm okay with losing that $50 because I've already established that I'm okay with losing $50 on a trade. That's nothing. That's only 2.5% of my account. So if I have a set stop loss, whether it's visual or hard coded, right? I go into the trade knowing that I'm not going to lose more than a certain amount of money, right? Because I've already set the parameters up for it, right? And let's say it doesn't hit the target, right? If I get into the trade and I'm at target 1 or target 2 or target 3, I've made the $50 plus some already, right? So once I'm usually in my trade, I've made this, you know, let's say I'm using 2.5%. Usually in my trades, by the time I hit first target, I'm already at the 2.5%. So if I wanted to close out right at target 1, I've already made this 2.5%. So anything after that is going to be extra profit. And that's how you have to think. So you have to understand, like, the stop losses are there for a reason, right? And if you're using if you're getting into a trade and you are holding on to it and it passed your stop loss by, 50 pips or 30 pips or something like that, that means that you've not set the parameters for your trade up properly, right? Because if you're still holding on to a trade and it's at the point where you're down, double digit, quadruple digits in stuff like that, depending on the pair, you have not stuck to your plan, right? Because you should already plan to lose, right? You should plan your trade as if you're going to lose the trade every single time. That's how you should look at it, right? And you need to be comfortable with the fact that knowing that if price just so happened to come up here, hit my stop loss, guess what? I'm only losing 50 bucks on a $2,000 account. Cool. I don't have no problem doing that, right? But what I'm not going to do is I'm not going to sell from here and sit into this whole ride going back up, knowing that there's a potential that it may not come back down, because when you do that, like I remember somebody told me one time, I almost remember this trade like verbatim, right? And I'm going to go back and I'm going to show you what this person told me. I might have to go to the monthly because this was a while back. And it was on GU too. It was on GU. Yeah. Oh, yeah. Somebody told me last year. It was last year. So let's go to the daily. Okay. Somebody told me they entered in a trade up here, right? And hold on. Let me just make sure this. Nah, it was over here. Let me see. Yeah, it was over there, right? Somebody told me that they were in a trade from around here, right? And somebody got them in the trade, told them it was a long-term trade. The price came all the way here, and they asked me, should I keep holding this? They were in a buy. They were in a buy from here, and they asked me down here, should they keep holding this?
Oh,
What you supposed to tell them? What you supposed to tell them? And they were in a big lot size too.
Oh,
right?
hell no.
Somebody asked me this last year, and like they were in a buy at the top of a drop. Like I don't look at when it finally came back. This is February 2020. This is July 2020, August 2020, before it got back to that. What am I supposed to tell them? Right? You asking me on this day, around this time frame, I don't remember exactly, but I knew it was somewhere around this order block that it violated, right? Should you stay in this trade? You should have been out of this a long time ago, right? There's no reason for you to still be in this. And like, she was so concerned about, losing her trade. She was just like, well, I must just stay in it. I'm gonna just ride it out. Okay, well then, if that's your goal, then you're no longer trading. You're investing at this point, because if you just gonna sit in this and it eventually it came back up, but you ain't turned a profit until a year, almost the end of the year. You didn't go back into profit. I don't even know if she held this. I think she quit trading after that, to be totally honest. But I know, I don't know if she closed it out. I don't remember. She kind of was hot at me because I told her that she need to cut her losses and close that trade out, but she did, she did. She needed to. And we just go back to where we were, it's the same concept. Like if you tried to sell right here, why are you holding this, right? You trade with a hit stop loss. You close it out and you look for the next setup. So that is going to answer that. You don't hold drawdown long. You stick to the plan. If you lose, you lose. You take your loss and you look for the next setup. That's how you trade. That's how you trade it. What's the significance of the dollar versus the yield? I'm still learning yield myself, but the yield, basically, to my knowledge, but I could be explaining this all the way wrong, but the dollar and the yield correlate, where they inverse correlate, right? When interest rates are basically responsive to how the yield is increases or decreases. And if the interest rate goes up, that's going to weaken the dollar. And if the interest rate goes down, that's going to strengthen the dollar, because that means that people have more buying power when the interest rates are lower, right? Right now, interest rates are sitting at 0%, right? So technically the dollar should be strong, right? But there are other factors right now into why the dollar is weakening right now. We're in a pandemic, right? So that's part of the reason, right? And when you're looking at the yields, right, you're looking for percentage points of like between 0.1, 0.01, 0.01 per every point, right? And the yield curves give you an outlook of what the economy is doing. If the yields are, if the interest rate are up, yields are going to follow, dollar is going to go as well, right? So if you're looking at the dollar right now, I know I ain't explained that right, but if you're looking at the dollar right now, you could trade a dollar against a lot of different pairs, right? I like trading in particular the dollar against EU, GU, in anything with anything with USD, you can pretty much trade the dollar against that, right? So let's use the compare tool, right? So this is GU, right? We can compare GU to the dollar index, right? DXY. And I'm gonna put this on this chart, right? And they trade inverse, right? So if the dollar goes up, GU goes down. If dollar goes down, GU goes up. You can literally look at the flow of the dollar, which is this yellow, versus GU, and see the exact opposite move. It's not going to be swing for swing, but the general direction of the chart is going to be the same, but in the opposite direction, right? Especially once you get to the higher time frames, right? So this low made this high. This high made this low. versus the dollar right here, right? We continually from this point, we started a downtrend, right? From this point, we started an uptrend, right? This point, we got a downtrend, right? This is a particular time when they actually moved in the same direction, right? When dollar was going down, GU was going down. Sometimes it happened, right? But we were trading in a consolidation basically right here over a higher time frame. And we were also trading near a low. So though the dollar was still going down, we didn't continue to go down hard. We just ranged, right? But we finally found levels in this range where this low held, right? And we continue back on the path from this point where dollars continuing to go down, GU starts its uptrend. We got a similar situation right here. Dollar continues to go down. We consolidate a little bit, but now uptrend, right? That's how you have to look at it, right? They're not going to be exactly verbatim, right? It's not going to always be verbatim, but overall, right? I can just put that back. Overall, it's going to be giving you a similar look, right? If we look at EU, same situation, right? EU over here. Let's go to at least the 4 hour. Compare DXY, that's the dollar. Boom, right? This swing high on the dollar set this swing low for EU. We started pushing up from here. We started pushing down from here. Swing low, swing high. We sell off from here. We push up from here. We get to this point right here, swing low, swing high. This sells off, EU pushes up. Only until we get to this point right here on this swing low on dollar, we meet this swing high on EU. Swing high, EU pushes down. Swing low, dollar pushes up, right? Then where do we get this sell-off on EU? When dollar makes a swing high, swing low. We make a swing high. We get the sell-off. We get the buy up. We reach this swing high, swing low. We get the buy up. We get the sell-off from here. And it just continues, right? That's what you want to look for, right? So let me hide this, right? So if I'm looking at dollar, my reason for selling or looking for the sell right now is on dollar, we have made a swing low on the 1 hour, right? We're making a swing high on GU and EU. We just waiting on the setup to take place to give us the entry signal, right? I feel like though we made this swing low on dollar, we may need to get a little lower down into this order block right here before we trade back up. So that's why I haven't called that yet. Could take a day, could take a week, but that's what I'm looking for, right? I don't want to call out anything until I see exactly what I'm looking for. So it's similar. You can use the dollar versus gold, silver, all that good stuff. It works the same way. So that's that. I hope that explained that. Futures are just another asset to trade. I don't trade futures, So I don't want to give out any wrong information about futures, but it's just another asset to trade. It takes a little more money to trade it, but it's just basically another asset. Um, do should we trade exotics? It's exotics are fine to trade. One exotic is USD ZAR. Um, that one's one everybody trades. Another one is USD SEC. That's dollar versus Singapore. And then another one I like to trade is GBP ZAR. Those are some good ones. USD versus Mexican dollar. Those are some good ones to trade. The only thing about trading exotics is the spreads are usually a little high. So whenever you get into a trade, you need to basically account for the fact that you're probably going to start off, even with a good entry, you're going to start off, in drawdown already. Like you can get a perfect entry. Your spreads might be 10 pips apart, 20 pips, 30 pips sometimes, So you have to account for that when you're getting your trade. So if you're looking for an entry right here, the trade might push up to this, but the spreads might be so far apart that you don't get entered into the trade. So you have to account for your spreads being high. So a lot of times, if you're looking for a trade, and you might need to market execute, because trying to put a pending order in, you will not likely get pulled in, if the spreads are too high. And then if you market execute into a trade, you just basically have to account for entering your trades in drawdown immediately, even if it's a good entry. And you may have to exit out of your trades on the stop loss and at the targets a little earlier, because the spread might not actually take you out the trade when you expect them to get out. There's nothing wrong with trading them though. Kim used to trade UZAR all the time, So that's one that I know she made a lot of money off of. I don't really like exotics. The only one I like really is, USDs are cool, GBPs are cool. That's just because they get a lot of pips. But I like those because you can like set pending orders on those and you can just let them go. You know what I'm saying? If you do, like I showed you, use this tool and set up all your entries properly, you can take swing trades off of those and just set it and forget it. So that's my advice on that. How do I enter an order into MT4 that is not market execution? If you are using the phone, then there's going to be, right before you enter the trade, there's going to be an option for you to select the type of order that you want to enter in, right? As soon as you open the chart up, when you hit the trade option, there's going to be a market execution option. If you click on that, that'll give you the option to enter a buy limit, sell limit, buy stop, sell stop, order type. If you are doing it from the computer, there's going to be an option for you to select the order type, and you just do a drop down, go through the drop down screen, and then you can select the order type. Let me give you a link though, that will be good for you to use under resources, trading resources. I did this video right here, entering trades, stop loss, take profits, trailing stops, margin, and leverage. And I show you in this video how you can enter it on the phone and on the computer. And you can watch this anytime. I'm gonna drop this in the chat. This is a good video for you guys that are like brand new. This is also a good video. I always tell everybody to watch these too. And I'm
Corey,
dropping them in the chat
can you
right
link
now.
the video as well?
Huh?
I watched your other two videos already. Can you link today's video as well?
Yeah, I am. I am. Um, this these two are really good videos. For like I said, this one shows entering trade, stop loss, take profit, trailing start, margin, leverage, and a couple other things on here. And if you don't, if you lose the links and you just come into the Discord, it's under resources, trading resources, and you can just scroll up and you'll find it. And then this one is good to go over how to take trades, how to look for entries right here. So this one is a really, really good way to learn how to enter trades. And I show you how to back test in this one over here too. So that's a really good video as well. And then that one is that one. Reason for Friday drop. You talking about on SPX, Anna?
Yes.
I don't know. Let's see. This is Friday.
Go on 4 hour.
You talking about this drop right here
One
or
minute.
this whole day?
Whole day actually.
Um, I don't know what was going on in the news on that day. But
Actually, what happened? I was also looking for setups, right? So when I was trying to compare with futures, right? So everything was negative, and I was seeing that candle is also means indecision candle. So nothing was like it is going to drop, but everybody was talking about market is going to push back, bullish market. So I was confused. I am seeing like market is futures are negative, and it can be go down, but everybody is talking about it's going up. Then it happened also actually. So I was confused. What I was missing, what I didn't see.
mm, um, so let's do a replay. Oops, hold on.
So look at 30 April, 9 a.m. kind of morning one.
Before that, I just want to see something.
Okay.
So this is the 29th right here.
Mm-hmm.
We already had this high.
Mm-hmm.
We already had this sell off.
Right.
Price before that
Yeah.
day is here.
Yeah.
So if I'm looking at this,
Mm-hmm.
I know liquidity at this high.
Mm-hmm.
I know it's liquidity at this low.
Okay.
Order block here,
Okay.
right?
Mm-hmm.
We got that established, right?
Mm-hmm.
So let's play it forward. We already got a rejection here.
Yes.
Price open up here. Let me pause it.
Mm-hmm.
Price open up here is pushing down, is pushing down. We do have a rejection
Mm-hmm.
off of a level that's important. There's an order block here, here. We do have a rejection. So I would have probably assumed that this was gonna push back up
Okay.
from here. That would have been my first thing.
Mm-hmm.
I would have been looking to say, this is gonna push up from here. I also know, let's look at the lower time frame. At this point, there's liquidity here. There's liquidity here.
Mm-hmm.
And then in between that, this is the daily opening price right here. So my question would be, do they want to take it up or they want to take it down? If they're going to take it down, they're going to probably want to push it up to grab some of this liquidity, right? This is what I would have been thinking.
Mm-hmm.
If they're going to want to push it up, they're going to want to see price take out this liquidity that's right around here,
Mm-hmm.
basically equivalent with this area right here or this area right here.
Right.
This is play. Let's play, see what happens. So I would have considered, okay, they took out the low.
Mm-hmm.
I would have honestly, I mean, I still would have stuck with my buy actually. I would have stuck with looking to buy this because I would have assumed that we got too many reasons for it to buy back up. Like if we look at the previous week,
Mm-hmm.
extend this is an order block right here, right?
Mm-hmm.
They traded back down to it right here.
Mm-hmm.
This low, you can't tell, but there's significant lows at this area all the way over here. So I would have been looking for them to actually buy right around this area right here. So though it sold off, my actual instinct would have been, I don't think that they're gonna push this down through this. So I would have been looking for a buy, sell to buy move, right?
Sell to buy.
So
Okay.
right. So we got the wick right here. There would have been the entry right there. And you would have had another entry. Does this push down? Now you all the way in the order block right here. You all the way in it. So this is the high of the order block. This is probably the low of the order block.
Mm-hmm.
He took half of the order block out on this candle right here. This actually would have been the best entry right here.
Okay.
That would have got you would have went in some drawdown, but you didn't get stopped out.
No,
You
actually,
might have got stopped
that day,
out right there.
that day I was doing something, so I took sale at.
You wouldn't have been wrong for that either. I mean, it did sell off, so you weren't really wrong.
Yeah,
For
yeah,
taking
it didn't
the
hit
sale.
my second target, but yeah, I was in profit, and again it started to go back. So
Right.
this is the thing. Means I was looking like it's sale, right? And when I took sale, everybody was like, "Oh, it's coming back. It's coming back." They were talking like that on Discord, right? So
Mhm.
means I was no. I listened to myself. I'm seeing this, I'll do this. So I got means a few pips, but I was thinking they saw something different, which I was not seeing, right? So
Mhm.
what was I missing? So that's why I was like, oh, okay, I need to find out what was that.
Okay.
Mm-hmm.
It's similar to the situation that I described right here, right? If I'm going to take this buy
Mm-hmm.
right here,
Mm-hmm.
I know it's liquidity right here.
Right, right.
So if I take this buy
Mm-hmm.
and it trades up, I know that I need to be looking to close out, or I need to have my stop in profit a little sooner because I'm trading into liquidity that's sitting near these equal highs right here. So if I took this buy, I need to know that if I get down in this area right here,
Mm-hmm.
it's a chance that it could reverse.
Yeah.
Just like if I take this sell from here,
Yeah, exactly. It was my point
chance
because
that it could reverse.
right, right.
Because us taking this sell, right? Where is the liquidity, right?
Yeah,
Where is the order block? That's this whole candle
right.
series of candles right here.
Mm-hmm.
So if I extend this out, this is where my demand is right here. So if I take this trade, right,
Right.
from this area right here,
Mm-hmm.
once I get right around here, stop losses, I need to start taking profit
Yeah.
right around here. As soon as it get right here, I gotta start taking profit because at this point, I'm near area where there is liquidity,
Right.
right?
And
So
I
that
think
means
this
that,
this triple bottom, right? Triple bottom also.
right,
Three higher
right
low,
here
right?
or right here,
Yeah, these higher low. Three. This is third one, right?
these three.
So it can go up also.
Exactly. It could even go up in here, right?
Mm-hmm.
But not even focusing on that. I'm
Mm-hmm.
talking about trading out of this high and
Yeah.
this low,
Right. Right.
right?
Mm-hmm.
If I trade it and break a structure right here,
Mm-hmm.
could I get these 17 pips?
Yeah.
Absolutely,
Yeah.
right?
Mm-hmm.
I could absolutely get these 17 pips
Right.
because if I know that if they're gonna sell this to get the liquidity that's near this area
Mm-hmm.
or trade back into the order block, they
Mm-hmm.
have to come down here
Right. Right.
if they want to buy from here, right? Well, at minimum, I know I should be able to take this to here because they got to come back down here. Now, after they come to this point, there, that's when the question mark come in play because once you get to the order block, you're at an area it could turn around with,
Yes.
at any given time inside of this little orange box.
Mm-hmm.
And if you see that, right, that could be your entry for the buy. And if you do, then you're getting in with the banks
Right.
down here.
Mm-hmm.
So in this case on SPX, that's basically what just happened over here, right? They traded down into this order block. You would have been selling the break of this area right here.
Mm-hmm.
Let me put the line on there. You basically would have been selling the break of this right here. 41.95, right?
Right. Mm-hmm.
Or even let's say whatever this number is. Let's just say 41.95, right?
Mm-hmm.
Sell the break of 41.95, and for sure, right? From this area to the order block, you got 120 pips, and it did it, right? On this 1 hour candle, right? But once you got that out the way, everything else was questionable at that point
Yes.
because you got an order block sitting right down in here, right?
Mm-hmm.
See the body of this candle right here. These two are basically the halfway point of the order block, right around here. right around here. This is basically the halfway point of the order block. And the majority of the trading volume near this order block is in these two candles. The rest of it is just thin, you know, that's why you got these long wicks, right?
Mm-hmm.
And it doesn't really trade down any further past this, right? So if you took the break, you got 120 pips here. If you took this little retest, which that would have gave you at most 200 pips, right? But look at what you should have been looking at, right? Should have been thinking, are they selling this to buy it? Yes, they did, right? So 200 right here, and this will keep going. Let's see.
So this was like order block and candles, right?
Yep. See, you could still been in this. If you got into this at this order block, you still could be in this trade to today. And your goal now is, all right, I traded from this order block. Now I'm going to trade to the next order block. This one right here. You didn't get it, but look at where you got this wick. Basically, right back at the close, or almost, you basically got the order block already. If you want to be greedy, you can wait till it hit the 4112 area, which would be the order block. But I mean, you pretty much got it off of this high right here. You know, is it, should it, it'll probably eventually trade through this right here. But I mean, there's probably, we look at the 15-minute, right? What's right here? What's this right here?
Hi.
What's this?
Oh, order block.
Yep. Right here. Here's the one on the 15-minute. Right here. We extend this all the way out. What just got captured? Right here. That's where it traded to, right here.
Perfect entry, right?
Yep. Well, there go your wicks. Your entry down here, your exit up here. You traded from the order block off the 4-hour right here to now this order block on the 15-minute, with the potential to trade up into the order block off of the 4-hour, I think this is. Yep, 4-hour / 1-hour order block at 4112, 4212. But for now, it's still, this one's still intact. We only had one trade off of it right here. This one is violated. It's probably going to trade through this. Now you're looking at what's going to happen off of the 4-hour. And that's it. Cool. Let me check the chat right quick.
So sometime like futures number and market both can be opposite also, right?
Say that again.
Like futures, you see futures, right? What they are doing, if they are negative means market is going to be negative, or
Yeah.
the smallest number means indecision kind of, right? So like
Right.
today I was doing that. So Dow was like 300 something, 343, right? And after that it came 315, and the market was going down. So this was big number when it was expected to go up, right?
Well, it depends,
And
right?
NAS and SPX both were, one was in negative and one was less number.
Right. It depends. So you have to look at the futures
Mm-hmm.
compared to where you are on the chart, right?
Mm-hmm.
So right now, looking at the futures,
Mm-hmm.
price is basically flat right here.
Right.
It's 7 negative, 22.5 negative, and 6.7 negative, right?
Mm-hmm.
So we're near liquidity right here.
Mm-hmm.
Equal lows. We near a little 15-minute order block, right?
Mm-hmm.
Your thought process should be, I'm near area where it's already bought one time.
Okay.
If I look at the futures and these numbers start to go positive
Mm-hmm.
or less negative, the likelihood is that this rejects this and continues to push up.
Okay. Okay.
If I'm near a high and I'm flat or slightly negative,
Mhm.
right? There's an order block right here. There's liquidity here. This goes positive. I could probably see this push up and reject to continue selling off, right? That's
Okay.
how you got to think. You got to depend. It all depends on where you are on the
Mhm.
chart and what the numbers are telling you at the time.
Got it. Got it.
So it's going to be different things, right? So you could be at a high. The numbers could be really, really, really high,
Mm-hmm.
but then you can start seeing the number decrease. You still
Right.
can be positive on the futures, but you could be pushing down on the charts because you've reached an extreme high, right?
Mm-hmm.
And now you're overbought, right? That's a sign you're overbought if you start to see you're at a high, but the futures are starting to go down, right? Or in the opposite, you can see that you're really, really negative, right? Let's say you're down here and the futures are like negative 300, right?
Mm-hmm.
But then you start seeing the futures go from negative 300 to negative 250, negative 200, right? That's a sign that it's a retracement or a reversal.
Okay.
That's how you got to look at that. And then the
Got it.
last question, let me see, is, I hope they still wrong, the four standards. I don't know which one of y'all this is, man. Are y'all even still on? Nope. They're not even on no more. But anyway, volume, basically the way you want to use volume is, the way I use volume is I use volume to define the divergence. And I'll show you what that is, right? We put it on the chart first, right? This is the volume at the bottom. You can see the estimated number of orders within a given candle, right? So if I scroll over here and look at this bullish engulfing candle, and then I look down at the volume right here on the candle, you'll see that this bullish engulfing candle has a lot of volume compared to what it was before, right? Let me make this a little darker. So if you see this candle, the volume was kind of low. Then we start picking up in volume, and you have the volume of orders increase as the price moves up, right? And the way you can use this is you can see like if we have an area like this, like we consolidating basically in between this low and this high. If I wanted to see a sign that this was going to be, you know, going down, right? If I look at this candle right here, this is the first candle to the downside, right? But this candle, even though it's pushing down right here, look at the volume. It's really, really low on this same candle. Let me highlight that candle right here. Look at the volume on this candle, on this one candle right here, right? If this was gonna go down, right, for real, this candle right here will have a lot more volume in it as compared to the rest of these candles, right? We should at least see that the volume on this particular candle break above the highest volume over here somewhere previously, right? Just like this is the highest volume for the day up until we get to this point right here. And then what happens? We get a rejection into the opposite direction, right? So the first time you see that the candle, the high of the volume right here is broken, is this series of candles, right? And the highest candle being this one right here. Right? So this particular candle broke the highest volume right here. And you got a sign that this was probably not going to sell off because the candle that sold us off, the volume was pretty low on this, right? Just like over here, right? This candle right here, given the time of day, right, there's not going to be a lot of volume of trading right now because you're trading in Sydney and Tokyo session, right? And the market just opened back up. So the volume is kind of low. So for you to try to sell right here, it's probably not a good idea, right? There's no volume, right? It's a low volume candle, right? We look at that particular candle, and then we look over here. We look at that candle right here. There's only 421 orders that were placed on this candle right here. It's not a lot, right? But this candle right here, right next to it, is a lot more volume than that candle. But this candle is bigger, right? However, there's more candles, there's more orders on this candle than there is on this one, even though the candle is bigger. This order is at a low, though. What do we see at this candle? More orders and indecision, because that's where this wick starts. This is the first sign that, hey, this isn't ready to drop yet. So do I need to sell this right now? No, because if I was ready to sell, the candle would look something like this, right? Versus being more orders on this candle and I'm rejecting, right? And from that candle on, we're starting to see price push back up into the range. Does that make sense? That makes sense?
Hey, Cory.
Yeah.
Hey, quick question. So is it safe to assume the reason why there's more volume in that one candle right there with the one with the indecision is that because there are buy orders and sell orders in there?
There's buy orders sitting on this candle, more buy orders in this candle right here. So you're
Okay.
starting to get the rejection of this low right here to push back up. Versus, you see this bearish engulfing? Look at this bearish engulfing right here. Look at this one right here. Look at the volume on that candle, right?
Yeah.
The volume on this particular candle came in at 1,127 as compared to the high previously of 937 on this candle right here. So if I was looking to sell, this candle right here would imply a lot more than this candle right here, because this candle actually broke the volume and rejected a level right here, right? It rejected a level. So if I don't get it on this candle, guess when the next volume happened? On this candle right here. Right here. What happened? The volume was at a high. It broke that high on the volume on this candle. What do you have right here? A candle implying exhaustion and rejection, right? So, you know, this would have been an opportunity. Hey, I could possibly take a sell from here, right? If I took a sell off of this candle, I could at least roll it down, back down to the low. Not have to worry about drawdown. You know, if I take the trade from this high right here, not have to worry about drawdown. At least I'm trading back down to the low. And if it break this low, I'm in trading down to at least this area right here, right? And I know that, hey, cool, I don't have any volume on the buy side on any of these candles telling me that I need to get out the trade. If we analyze this part over here, same way, right? Same way. I'm near a low, higher low. I got volume on this candle. These two candles actually, right? These two candles took place inside of London. I mean, not London, but Tokyo session right here. So, but prior to that, this was the high volume candle right here, right next to it. So, I mean, you can use the volume, you know, in any session, right? But I just don't like to do it inside of Tokyo or London. But if you look at it, right, this candle was the high, right? And then these candles broke the high. But when they broke the high, they made a higher low, implying that this could possibly be rejected. Also notice the last time there was a spike in volume was over here at these two areas, one right here, one off of this candle, and then one off of this candle over here, right? Now, why is this significant, right? This made a high in this area, right? This made a higher high. And not only did this make a higher high, but it made a higher high and it was overbought right here. We know that because this indicator lets us know that this is overbought right here because it's red, a red higher high, meaning that it's overbought. You tie that into the fact that, okay, you got three factors, right? You have the buying stopping right here, selling starting right here. The next time you get volume, I'm going to add one more thing into this. The next time you get volume, again, after this candle is right here, this begins the retracement. What kind of candles you have right here, right? Bearish engulfing, lower volume than norm, rejection candle, meaning it's time for the retracement. So adding these three factors in, right? Sell off, retracement begins. Next time I get volume, in a retracement, order block, rejection, lower high, sell off, right? All of those factors come into play, right? That's the volume spike on this day, right? The next time I get volume, right? Where am I now? I'm trying to make a low right here, right? The first time that after I get this sell off right here, I try to make a low here, right? Volume spike right here, spike in volume right there. It fails, right? I couldn't get enough, right? I didn't get enough right there. So we won't even really pay attention to him, right? Because that was a fail. The next time I get a volume spike here, this volume spike is important because this volume spike is happening during London. I don't necessarily care about this one because this isn't a strong session, but this low, this spike in volume is important because this happens during London. It fails, right? And then we get pretty much consistent volume from that point right here all the way up until we get to what? New York session, right? We just took out this low. This is when this low was established over here. This low right here at the lower low was really established over here, right? After this low was made over here, and we're gonna basically say these two are the same lows. The next time we get a spike in volume is where? Right here. At these candles. Right? The high of volume was around this London candle right here. The next time we get volume, we're in New York, right? New York is finishing this sell-off, right? We established, right? We made a lower high right here with no volume, right? So that's a sign that this volume does not break this volume right here on these series of candles, right? So that's a sign that it's a false move, right? That this isn't gonna go up from here, right? Because if this was really gonna go up, the volume would kick up right here to the upside, and it doesn't. It fails, and you actually get volume to the downside on these series of candles, right? We make a high on the volume right here. Over here, though, confirms the slowing down of price. We get a wick, we get a spike in volume, we break the volume high from before, and the price stops moving down. This is setting our low right here. We don't get price going too much lower than that, at all, right? Maybe within about 10 to 20 pips, right? It doesn't move any lower than that. 14 pips to be exact. We get another spike in volume on the New York Open on these 3 candles. This confirms this is ready to reject and turn around right here on these 3 candles right here. Spike, spike, spike. Set the low, reverse. That's how you use volume. Volume is it's not a it's a it's not a leading indicator. You have to use the volume from a previous move to analyze what to do with a move that you're looking at. So like here's that area right now, right? We are trading near a low. The volume on the sell side is low on this candle, but it's a bearish engulfing. Sign of a fake move down, right? We get high volume on a rejection candle, a little spinning top. So it's trying to figure out, is this low, higher low going to be valid, or does it get taken out? As it stands, this higher low is valid. And unless we get a spike in volume outside of this that breaks above this or pushes up quite high, we stay in this range right here. So that means that this is not ready. Yeah, I'm gonna send this session to you guys. Would an evening star make a difference in the sale? As far as using candlestick patterns, I don't know exactly when this question was asked, but yes, that would make a difference. Definitely would make a difference. You can use candlestick patterns with the volume to actually confirm whether it's a valid pattern as well. This is a vector right here. If I want to know whether this vector is valid, I could check the volume, right? My wick, I started with my wick right here. I go into the multiple candle vector right here. Wick, 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 right? Near to this, if this is going to be a valid vector, I can basically say, at these wicks, am I getting high volume? Look down here, increase in volume. We were low. We dropped down, increase in volume right here. We get to this high, get to this high, get to this high. Volume stays a little high right here, and then boom, we get a spike. Entry. If you miss this, boom, volume starts at low, go low, go low, go low, start get an increase, boom, here go another entry, and you can take the trade from there. Work the same way. If I'm looking for this area, just like we established from this point, volume is low, 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 boom, spike, vector, 1, 2, 3, entry right here. I'm in this trade. If I want to add on to this, where is my volume? After this point, if I'm in the trade, I'm in the trade, I'm in the trade, volume start to go down, go down, go down, go down, gets low, boom, I got a spike in volume right here. This spike is pushing this little spike right here relative to the previous candles. It's much higher, right? This is telling you this has a chance to continue right here. This one candle right here is telling you this has a chance to continue, right? Because I got unusually low volume coming off of this high, volume lower, 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 right? Price moving higher, 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 right? I make the lower high. This is divergence right here, where you have price moving up, but you have volume going down. Divergence. Price moving down, price moving up, volume going down. Definition of divergence right here. Then some buy side divergence, right? Volume going down, price moving up, sell off right here, divergence to the upside, right? You got selling volume increasing, you have price moving down, right? Until you get to this point, boom, price push up. Simple. Simple as that. Simple as that. Simple as that. I don't use it all the time, but sometimes I do. I don't really use it a lot now, but just because I can kind of see already, without using it. But it's definitely a good tool to have in the back of the pocket, in the back pocket. So but anyway, no more questions. So I'm gonna go ahead and I'll drop the link for this. Let me get the questions and let me drop this for y'all. I'll go ahead and save this for you guys. Let's see where we at. Live right here. Let's go back. Okay. Okay. All right. Edit video. I'll go ahead and end that now.